Today is Thursday, August the 6th, and I'm sorry that I'm getting this out so late. Let us look at the oscillator. Oscillator took a little bit of a dip down, so we've got these points here. 1, 2, 3, 4, 5 points now where it's sort of hit a top and pulled back. So we do continue to have this choppy motion going all the way back to early June. The stacked volume was a little bit less than the prior day, and today, see, the market was up today, but the decliners led the advancers, so it was an inverse kind of day. The Dow Jones was up, approaching this green line that we drew, which is this previous high, which was support here, support and resistance here, so it's an important point. That's where we're heading. The NASDAQ, big breakout, but look at Apple. Apple was up $17 today. And the S&P is nudging up towards 100%. It looks like it really does want to double top. Apple blew that, we drew this little pennant flag yesterday, bull pennant. It made fun of that, just blew that one. You would expect it to see some kind of congestion, blew it out. Tomorrow it goes ex-dividend. NVIDIA has an important Fibonacci to look at, and I've got two of them, but they're the same. We've got this Fibonacci, which is an extension of this wave pulled down to here. What would it take for this wave here to repeat this move up there, which took January 2016, 2.5 years? It hit 100% here. This downward motion has its Fibonacci at 161.8. Now you might say, well, yeah, but you're figuring in this second leg as part of this one. That's true. So they should correlate pretty darn closely together. It just doesn't matter which Fibonacci you use, whether it's trying to see if you can replicate this move or it's trying to see what you can get off of this move. Both the sets of Fibonacci's pretty much superimpose on each other, which means it's coming in for a rendezvous of 200% of this move and 127% of this big wave. So 460 might be resistance there. Caterpillar just continuing to move up, going to be held down by this trend line. Home Depot, another big day today, and it did break above this resistance, which has been resistance for about 8 or 10 days, so that's important. The last stock we're going to look at is Whirlpool, continuing to just rock and roll, stopped at 78.2%, but it really should be on its way to 216. So watch the market tomorrow. It's Friday. It's not options expiration other than the weekly options. Don't know anything. Oh, well, we've got a big jobs number happening tomorrow. Today, the unemployment numbers were 1.2 million. They expected 1.4 million, so that helped the market a little bit. But tomorrow will be another important day in terms of reporting numbers, but the market doesn't really care about numbers. And if there are bad numbers, that just means that the Fed will continue to pump money into and liquidity into the market. So there you go. Don't fight the Fed, but eventually greed will rule, and these massive profits that people are taking in Apple and the other FANG stocks. Look at Disney. Disney is doing really well despite, I don't know who's going to their theme parks. Let's just draw a Fibonacci on this and see if this is anything we want to take a look at. Let's get rid of the volume so we can see the bottom of this. Let's take this one as the bottom. And did we hit a Fibonacci there? Whoops. Don't want that to happen. No. So 61.8% was the resistance. We pulled back to 38.2. Now we've broken 61.8% pretty convincingly. 137.93 is the next stop. I wouldn't keep pumping money into this market, but if you're holding stock, keep holding stock because it's going up. Or you could sell calls at 10% above the current price.